Hi everybody, welcome back to the channel, and you'll probably hear some background noise and some wind going on. Just to give you a heads up, it's such a beautiful day outside, and I thought I'd go ahead and come out here and just make a video on the U.S. Schwab Dividend Equity ETF. You'll see that we're up over 6.68% in the last year. Now year to date, this ETF is performing just over 1% up in terms of your capital appreciation. Over the last 6 months, though, we're up nearly 15%. So just going back to those time frames, you can see the difference. Over the last month, down 3.32%. The big kicker, though, is since the COVID collapse in 2020, when everything was crashing, you guys remember, I remember this too, everybody's freaking out about the economy. And we were going down from, let's say a 20-30% drop on the Dow Jones, NASDAQ, and all that kind of stuff. So when this happened, down from $58 all the way down to $40 per share, that was quite the shocker. But then look what happened right after this. And you'll see over the last 5 years, we're up over 40% on this ETF just in terms of your capital appreciation. Now, that's not even accounting for the dividend, which everybody gets excited about. And you'll probably hear some wind background noise. I apologize if it's kind of hard to hear right now. Hopefully you guys can still hear me. But Schwab, or this SCHD, the Schwab U.S. Dividend Equity ETF, it says here paid 3.45%, $2.67 per share. If we come over to NASDAQ.com, this is one of my favorite resources in terms of actually looking at this ETF and trying to implement this into our portfolio, because we can take a look at the most recent dividends and see how much we would actually get paid. And you'll see that they pay on a quarterly basis, and so every 3 months you'll get those dividends paid out to you, these most recent payment days. And then we have the ex-dividend day over here. We have the cash amount right here. Now this says it's a little bit different, 3.15% dividend yield depending on which website you check. If you check finviz.com, for example, this ETF, so you'll see here that since November, we've actually had a pretty good run up in this ETF, and we're starting to sell off a little bit. So we have this potentially bearish movement where maybe it's going to try to retest these highs and then do what's called a double top or something like that. But this is a long-term thing too. This is not just like looking at the short-term charts, I would say, especially if you're an investor on my channel. If you're looking at specific investing insights, we have an article we just wrote on this ETF, and I will leave the link in the description. But I was talking about how this ETF basically has lower volatility. And one of the things to consider is the current beta of 0.89. So even though this ETF is going to fluctuate, it's not going to fluctuate as much as, let's say, the S&P 500 or those major indexes. It is typically the goal here. So with the lower beta, and that was when I wrote the article, it looks like it's still 0.89 on the beta. So with that being said, dividend yield, this says 3.45% or $2.67 in terms of the dividend. So we have the holdings breakdown, which is really helpful as well. You can see all the different percentages of where these sectors are laid out. So, this is one of those ETFs, guys, where I would say it's an ETF where if you're looking at this for the next 10, 20 years and you want to get a consistent income stream, this is something to consider. Now, when you have a consistent income stream, let's say every quarter you're getting those dividends, 3%, 5%, whatever the yield is on the ETF at the time, keep in mind that when you get those dividends, you can do one of two things. You can either reinvest it into a dividend reinvestment program, or you can also just take those dividends and live on them. So basically, those are the two ways you can do things. And so with that being said, you have companies like Lockheed Martin, PepsiCo, Cisco Systems, many other well-established brands. So this ETF is focused on high-quality companies that really are going to be raising those dividends, the highest quality U.S. companies. And that's why this is so popular, I think, with investors, is just due to the fact that this ETF is focused on the highest quality companies out there. And so with that being said, guys, this is just one of those things where we can look at, here's the most recent dividends we just talked about, and then here's the performance since 2011 when this ETF came out, over 200% on your principal. So it's keeping up with inflation, I would say. Inflation is relatively high lately, and the fact that this ETF is focusing on high quality companies also means that this ETF has the potential to really benefit from dividend increases over the long term. And if you look at this, let's say going back to 2011 when this ETF came out, and this is an important consideration, although past performance is not necessarily indicative of future success or results in the market. We're paying dividends here of, let's say, 12, 13 cents. We have a 20-cent dividend, a 25-cent dividend. But if you look up here, obviously these dividend amounts have grown over time. if you had a chart, it would look pretty good. I mean, going, I guess, this way from how you guys are seeing it on the screen. But basically, it's one of those things where, like, you're looking at the long-term growth. You're not just looking at the initial dividend yield. And some of those ETFs, like if you're just focused on immediate income, let's say you want to go into retirement and start paying your bills with like JEPQ, which is a great ETF in my opinion. And I think there's room potentially for both ETFs in one's portfolio. I even saw a comment from somebody saying this ETF was being used to generate cash secured put premiums as well. So you can do options, and I can make a separate video on that. And basically this ETF in particular is a high quality ETF focused on long-term dividend growth and share price appreciation. Because when you focus on quality, the yield doesn't matter so much in the short term. It's more focused on just finding those high quality companies, investing in them in the long term, and then benefiting from that. And with that being said, guys, I hope you enjoyed this short video. Check out the guide or the article that we wrote on dailyinvestmentadvice.com. Also, guys, check out our newsletter. Our newsletter is really just designed to keep you updated on the content. So you'll see videos embedded into a lot of these articles on the website. So if you want to stay updated with a lot of these passive income ideas, sign up for the newsletter. We try to update you and keep you up to date with what's happening on the website and everything. And then if you want to support this channel, you can sign up for Daily Investment Advice Pro. We do have some pro watch lists and stuff you can get access to. But I'll leave that link in the description. You know, it's just a way to support this channel if you like the content. All right, guys, thanks so much for tuning in. And yeah, all right, take care, guys, and we'll see you in the next video. God bless.